I was dead wrong about Saitama. So I was wrong about my exit strategy for the Saitama trade that I executed yesterday and today. Yesterday to today. Now, a few days back I showed you guys the setup that I was looking at for the Saitama breakout. Alright, let me just show it to you now. Here you go. This was the setup that I was looking at, and I was looking to buy once I started looking at this over here during this candlestick here. Each candlestick here represents one day. So I started looking at it somewhere around here to be precise, on this day, 1st of Jan, and I was waiting for the next candlestick to be above this and engulf it, meaning to say it has to be larger in size than the other one. So on the second day it was a little bit larger, but on the third day, on 3rd of Jan, that was the largest one. So that's when I decided to buy, and I also wanted the volume to be in the positive. When this candlestick here came about, I didn't execute the trade because the volume was down, but on this day the volume was up as well, and the candlestick was engulfing the previous day's candlestick. So these are indications that tell me that I should take the trade now. So that was the right part, but I was wrong in a sense that I sold out too early. My exit strategy was really poor. So shout out to one of my viewers, Liam Holland. I did a YouTube shorts a while back today, and he commented there, and he posted a really good comment that gave me a wake-up call. So you can check it out in the previous YouTube short video. I think he dropped really valuable some really valuable pointers in the comments. So coming back to this, I was wrong about my exit strategy. Right now Saitama is up by 48%. A while back it was 50%. And I was just looking to make 10% gain. That's what I said in my previous videos. You can check it out. I started covering this part, the trading part, like for the past 2 days. So you can go and check it out. I did call this out, but my exit strategy was really bad because these things that I learned this through trading of stocks, and it does not really translate the same way into crypto because cryptos are way more volatile. So my exit strategy was very simple. When I make 10% gains, I will get out of the trade. However, if you look at the Fibonacci retracement, you will see that this is when I started looking at it. This was the support line here. This was the next support line here. So when these candlesticks were forming, if this bullish momentum and the volume continued, theoretically it could go all the way up to this level, and the downside would be this level. So by right, this would have been my risk. I would be risking this amount here, and this would be my potential gains, because if it went this way, this is what I would make, and if it went this way, then this is what I would lose. So you can see that the loss is smaller. It's almost half of the reward. So this is really good risk reward. So the setup was right, but my timing of exiting the trade was completely off. Now, what would have been better? I should have sold my price target, my exit price target should have been this level here, at least. Because what's the point of risking the money if you're not going to wait until here? Furthermore, Saitama is also releasing, I believe, this weekend. So the bullish momentum will continue. It seems like it's dropping right now. So for me, the next day has already started. Today it's 5th of Jan in Singapore. So I'm ahead of you guys in terms of data that I can see. Just kidding. But it looks like, it's pulling back, which is okay. I think it will pull back a little bit and then it can continue. And if it breaks this line here, and if it can break this resistance line here, it can go all the way up till here. All right, it can go all the way up till here. So that's the mistake that I made. I should have set this as my target, this level here, and get out of the trade here. instead of 10%. What I was looking at was just like 10%. What I had planned was getting out at 10% gains, or if the trend reverses on me, then I would have gotten out at about 5% loss. However, that was the wrong way of looking at it. I should have just looked at the Fibonacci retracement levels, and this should have been my exit price, and this should have been the price that I should have sold at for profit. And if the trend reversed on me, then this should have been the level that I should have sold it, set a stop loss. Basically, I'm using Poloniex trading platform to do this trading. Anyway, I don't regret it. I think it was a good learning lesson. One of my New Year's resolution this year is that actually I only have one New Year's resolution this year, which is not to regret anything. So I don't regret it. I think it was a good lesson, and I'm going to apply whatever I learned here in my next trade. Now, I'm not sure what I'm going to look at next. Saitama Inu, maybe. Let's see what's going on. Let's see what's going on with Saitama Inu. How do you spell it? Coin market cap. Okay. Saitama Inu's volume is up and the price is up by 4% as well. So I should take a look at this chart. See, I'm going to take a look at this. We're using the Fibonacci retracement and check it out on DEX tools and see if this presents a good short-term trading opportunity for the next one. All right. So let me know what you think. Let me know if this is a good strategy using Fibonacci, and of course the momentum, the volume, and also the engulfing candlestick. Let me know if you think that this is a good indicator to determine when to enter and exit the trade. My timing was right, but my timing of entering the trade was right, but my timing of exiting the trade was horrendous. But it's all right. That's it. Thanks for watching and have a great day.